Good morning, everyone, to our VIP prep. It's Story Trading. Got a special guest here, Chris Tarbert, to top off the show, to start off the show before we get into everything. He has been covering Clearfield for us, CLFD. There was some news out this morning. Chris, why don't you tell us about the news that was out and the impact you think it has?
Sure, absolutely. So Clearfield did an acquisition today of a
Let me
supplier.
check my
Sorry?
settings, make sure it's not me.
Okay.
Audio. Check your mic, Chris.
Yeah, my mic's on.
All right, my audio is good. Chris, you want to try again with your mic?
Yeah, my mic's on.
There you are. There you are. All right.
Okay. Sorry about that.
Tell us about Clearfield this morning, CLFD.
Sure. So Clearfield purchased a subcontractor of theirs, a Finnish fiber optic company. As you can tell from the deal report, it was $23 million US that Clearfield shelled out. The company in Finland does about 32 million in revenue. They're growing around 20 to 25% per Clearfield's call this morning. In sort of my analysis, it seems like this is a supply chain protection issue. The company has been around for 10 years. They provide some components for Clearfield's fiber optic field shield product line. This also allows Clearfield, I think, in probably within 6 to 9 months to also start pushing its product line into the European marketplace. The deal, as they announced, is instantly accretive. I don't know by how much. They just gave pretty much top line revenue numbers. So I think we'll get a better clarity on that on the July earnings conference call. It seems like the deal is going to close fairly quickly, probably within 3 to 5 months, if not less. I think this is obviously a great move for Clearfield. It looks like they're going to take some of the fiber production that this Finnish company did to their Mexico plant, which they expect to have that portion completed in the first quarter of 2023. Whether this is a big move against Corning or not, I don't know. Again, this is just, I think, in the immediate term to sort of protect that supply chain issue for their field shield product line.
All right, great. We have you presented Clearfield to the story trading community a couple weeks ago. We have a YouTube video out on it, and hopefully we'll have a Benzinga article. We submitted it yesterday to them. We'll see what happens there. But if you could quickly give us before you go, kind of your either price target or what you think fair value is for the stock.
I think they're blowing it out of the water right now. I think the analyst numbers are extremely low. The article that hopefully will be posted today or tomorrow will sort of give some math and some analysis on where I think the price targets are. I think you're easily looking at triple digits in the next 6 to 9 months. And that's with a conservative PE of somewhere between 20 and 30. So look, it really depends on if there's some PE compression here going forward. But, for a company that's growing, 100, 150% year over year and looks to be continued to go, to continue that growth, a 25, 30 PE is light. And, they're talking about, putting up, earnings per share of probably $4, $4.50 per share in early 2023. There was a big article out yesterday about, Joe Biden kicking off the $45 billion investment into broadband, into fiber to the home, and into the rural areas. I just think, they're they didn't make this acquisition willy-nilly. They haven't done an acquisition like this in ever in the company's history. So they're clearly investing for a tsunami of revenue coming down the pike.
All right, great. Thank you so much, Chris, for coming to us short notice. And hopefully we'll see that article with a deeper explanation out there on the wires soon. Thank you, Chris.
All right, thanks, Ben.
Yep, take care. All right, guys, let's get started. Looking at the macro, you see NASDAQ up 2%, SPY 1.6%. But really, first I want to show Apple because Apple is the key to all of this. Apple to me is still in a bear market here below the 50-week moving average. But today was a big day for retail numbers. We had U.S. Retail data out today. We had Home Depot with earnings, and we had Walmart with earnings. The retail data that came out was mostly in line. Some of the metrics beat expectations. One of them was slightly below, but it's still a deceleration. Retail sales are still slowing the last few months. Now, we also had some other data from Home Depot and Walmart, and you can see the stocks are going in opposite directions. So, what's happening here? Well, with Walmart, the issue is what we saw at Amazon. It's the cost side. It's the food and energy prices that are impacting the profit margins, and you can see the stock down 6% because of that. Home Depot is seeing also the impact of inflation, but they've been able to pass those costs on. And what's happening there is they have fewer tickets, fewer customers purchasing at Home Depot, but the average ticket price is higher, and they've been able to again have enough pricing power to increase their profits. So that's actually the reason I'm not really shorting this market, even though I'm very bearish, is because it's kind of hard to technically get a recession in a high inflationary environment. Yes, people will be able to buy fewer things, but the dollar amount they're spending is not really decreasing, right? So that's a tricky one macroeconomically to say, hey, I want to short this market. And there you see the divergence between a company that's able to maintain their profits, HD, and Walmart, which is unable to. But I'm still leaning towards the bear scenario because I think a lot of companies will be unable to maintain their profit margins, and you get into that kind of stagflation scenario. Another data point to look at is global GLBE down 22% because they guided lower, in fact, significantly lower on their revenue. See if we can see it in the news feed here, but it was May 16th. Let's see. Here we go. Q2 sales 82 million versus 90 million estimate. And I think the full year was even a lower hit. So that's to me a sign of slowing retail, e-commerce, people who maybe have small businesses, things like that, could be impacted. So macroeconomically, I'm still not so impressed. I think we're still in a bear market, and as we get these pops, I'm going to be looking to decrease anything that I think is going to be one of my favorite ways to play this at resistance levels. So, continuation of what we talked about yesterday, we did really well calling the ag sector pop yesterday, particularly IPI, because of the breakout in wheat, and you can see IPI. At the open, it just took off, and that worked out well, and it's continuing here. And I actually called it last night at the weekly Spaces and Modern Wealth Financial. I won the competition last week picking DRIO, which is up 50%, and also picking ARK-K to buy it at $35. So that was great, taking a victory lap on that show. And my two picks, again, IPI, even though it was up so much yesterday, and then the other one, CCJ, we'll talk about in a second. But IPI, if you look at this chart, the weekly, 20 weekly moving average, you can see it broke above it. And I still think we're getting geopolitical tailwinds here. And although we see a slight pullback in wheat, it's still a very bullish trend. You see corn basically dying to break out of 30. Looks like it wants to explode, honestly. You see soybean has some resistance at 28 and change here at the 20 DMA. Incidentally, potash fertilizer stocks do a little bit better with soybean, coffee, cotton, as those are higher. Those require more fertilizer, but that's not to say corn and wheat don't. They also do, but it's definitely more of an impact when you see soybean up. But in any case, I think the whole sector is still in a bull situation because not only wheat prices, but the geopolitics that we talked about yesterday, what's going on in Russia, things seem to be getting a little worse. So I'm holding the IPI I bought yesterday right at the open, and I think this has legs to maybe around 80. So that's the call on IPI. Now, I want to also bring up the second pick I had last night. I think uranium may be in play and possibly in a big way. I called it yesterday. You can see already CCJ is up 3.5% this morning. So already on the right track here. But why? Why uranium? Well, because USO, okay, you can see here USO has been very, very strong. And throughout, since the war broke out, there's been a very strong correlation between energy and uranium, especially actually natural gas, which also has a very strong chart here and exploding. Natural gas has a lot to do with electricity generation and usage in Europe, and that ratchets up the talk about nuclear and uranium. But when I see USO and UNG near their highs and XLE near their highs, but uranium sharp drop, right? I'm like, that might be a great entry. That's the exact same logic I used for wanting to get into potash stocks yesterday. Was all the ag stocks are at the highs, but like IPI was down 50%. So I think the same thing could be happening here. I mentioned it towards the end of the day yesterday, already off to a great start. And I'll let you know uranium, I'm sorry, Energy Fuels, UUUU, one of the uranium stocks had earnings yesterday, which looked pretty good. You can go and review that earnings report, but that's up 5.6%. So today, the main trades that I'll be looking at are going to be continuing on the potash theme. You can always look at MOS, MOS, and also CF. But IPI, my favorite one there, and uranium, you can always look at DNN and some others, but CCJ, my favorite one there. So that's what to look for over there. Now, scrolling down a little bit, man, Twitter just got to cover it because this is crazy what's going on. It looks like Twitter is now kind of desperate to close the deal. Um, they have some news out here that says that they want to close at the original price as promptly as possible, and it's just funny because we thought, a few weeks ago, there's no way that Twitter is going to accept this offer from Elon Musk, partially for political reasons or whatever people thought, or price. Some people are like it should be 70, and here we are a few weeks later, and Twitter's like begging Elon Musk to close. Very interesting what's going on there. Thankfully, I got out of Dodge when it broke the 20 DMA. Dodged a bullet there. That's why we use all four pillars at StoryTrading. And I don't know. I might look at this maybe. It's very risky because if he pulls out, like, this thing can go to like $25, right? Um, but if he renegotiates the deal lower, I'm pretty confident it'll be much higher than 37. You're not going to go from 54 to like below 36 or something like that. Like maybe it'll be in the 40s or something. So that's one to look at. And then DWAC obviously has been strong because of all the news coming out of Twitter and the deal possibly falling through. And by the way, the Truth Social web app is now in beta testing. So there's some momentum there. Trump has like 2.7 million followers, but overvalued. I'm not playing it. Again, I always have to give this caveat. I like to watch this because it can give a tailwind to Rumble, CFVI, which is the cloud provider for Truth Social, but also sentiment wise could get some of the same premiums in the market that DWAC is enjoying potentially. So I like to monitor what's going on with DWAC. Man, DRIO's been amazing. What's there to say? But now, if you're trading this, you got to start looking. And at some point, this thing's got to pull back. The RSI is at 64. It's already up 5% in pre-market this morning. I don't know, maybe around in the sevens. I've been collaborating with a couple other tech people who think set around the 7 range, in the sevens, right around here. It may start having a pullback. If I do anything, it'll just be maybe selling some covered calls. To me, this company is at an inflection point. I've been holding it for like 2 years. I was able to massively average down and the last couple weeks. So I'm holding this. I think this kind of re-rating in the stock and is going to happen over a several quarter period. If they continue to execute, I think this is a stock that even through a bear market could see $20, $30 plus. A lot of it depends on if they can avoid dilution from financing. So we'll have to keep monitoring that and doing further due diligence on that. Okay. And that's about it, man. KODK's been a big flop for me. Still own it. I'm desperately trying to sell more covered calls every single week. Got to lower my target price on those covered calls, the strike price on those covered calls. So that's how I'm playing KODK to get myself out of that hole. And that's it. Don't have anything else. Let's do one last review here. And we can see people talking about Global E going down. Target, I think, is down in sympathy this morning with Walmart. Yep. Well, it's clawing back some of those sympathy losses with Walmart. Home Depot, again, wow, doing great. People like to see that pricing power and the profits coming to Home Depot. So this is an interesting one that I've thrown out there, but I haven't gotten a lot of people collaborating on it. Let's go bigger screen here. CSSE, Guggenheim came out with a $21 price target. Man, they did a very interesting take under of Redbox, and you can see it went down from like 10 to 5, got cut in half by 50% because they're assuming hundreds of millions of dollars of debt from Redbox, even though they're gaining a lot of revenue and potentially EBITDA as well that they're guiding for. So it's on my watch list. I don't own it. I keep throwing it out there because it seems interesting. I'm hoping someone picks up the due diligence on that and we can decide what to do from there. So, guys, thank you everyone for tuning in. Again, the big ones I'll be watching today, already winning IPI and CCJ. Have a great day. Good luck, everyone.